So it's a pleasure to welcome to our series this morning Mr. Jon Adgemis, Executive Chairman of the Jaga Group and founder of Public Hospitality Group, one of the country's fastest growing pub conglomerates. Jon, pleasure having the opportunity to have you on our program. As I understand it, you're the son of Greek parents and grew up in Sydney's eastern suburbs, attending Cranbrook School. Take us through a little bit about your background, if you could.
Yeah, look, first of all, thanks for the opportunity, and feel very honoured, having regard to some of your previous guests, to be here today. I was educated at Cranbrook School, and my parents worked very hard to provide good education to us. I have two older siblings as well. At the age of 13, my father passed, which was particularly a difficult time. I had a very close relationship with my father. But I think that it's fair to say that on reflection now, that was a big part of the character building in me, and so whilst at that time you don't really see the benefits of something like that, certainly I think from my perspective it helped me mature much earlier in life, and probably explains a bit more about my career progression as well.
Tell me about the influence your father had on you up until the age of 13. What did you learn from him?
Look, one thing I say to people who have asked me about my relationship with my father is that I had 12 wonderful years, and sometimes some people just don't get that opportunity to have such quality time with an individual, and so I feel blessed for that. He taught me from a very young age the importance of doing a hard day's work, and in fact I'd spend my holidays actually going with him to, he had a food service business which we sold after his passing, and I would spend holidays actually being with him at a young age at his warehouse doing work, and I knew no other way but through a hard day's work. That's how you actually got the rewards in life.
And would that have been your first exposure to business? And the reason I ask is, following completion of your high school studies, you enrolled in an economics degree at the University of Sydney, graduating in the year 2000. Was that part of the impetus of wanting to study business and economics?
Yeah, look, in fact, I got a good exposure very early in the piece through going to work with Dad, but also being the only son in a Greek family. There was a lot of emphasis on the boy, and my mother still had some things to work through at the time of his death, which was in the early 90s, the recession we had to have. And so I found myself from the age of 15, 16 attending meetings with my mother as we worked through some of the post issues relating to my father in an economy which, globally around 1990, 91 was pretty challenged. So I think both parents had a profound influence in terms of giving me exposure and trusting me very early in my life, which again set the tone for what I wanted to do. And it wasn't clear it was going to be corporate advisory or mergers and acquisitions, but I certainly liked the idea of business and wanted to be part of that business community.
And if I recall correctly, post-university you joined Gresham Partners in Sydney. Is that a fair assessment?
So I actually joined KPMG first. So it was 1999, and I went in to meet a person who was a friend of my brother-in-law's, Chris Vatakis, who's now passed unfortunately, but he was running corporate advisory for KPMG in Sydney. And I went and had a cup of coffee with him. I was still to do a year of my studies, and he offered me a role at the end of that meeting to come in over a summer break, and I took that role. And towards the end of that summer break, he said, "Well, how many days are you required at uni in your final year?" And offered me a job 4 days a week. So I put all my tutorials on one day and did 4 days at KPMG, and then did did a day at university. Up until that point, I actually was working in the Sydney fish markets for a family friend on the weekends while I was at university. And you know, I often think back around those 4:30 starts, and you know, when all my mates were getting home from being out, and sometimes I'd even go straight from, you know, being out myself, and working down at the fish markets in the middle of winter. And I worked Friday, Saturday, Sunday, and was at uni Monday to Thursday. And I thank my mother for that. Whilst she had the means to support me, she certainly didn't hand out things to me, and you know, quite frankly, I wouldn't have wanted it any other way. So so KPMG was where I began in mergers and acquisitions, and spent a couple of years there, and then moved to Gresham Partners in 2001.
It's clear that you've got a phenomenal work ethic, which has obviously been instilled by your family. Take me through your first exposure to mergers and acquisitions at KPMG and later corporate advisory at Gresham Partners. What sort of deals and transactions were you working on?
It was interesting. Back in those days, KPMG wasn't known to be a mover and shaker in the mergers and acquisitions world. It was an offering that they had that essentially was to service existing clients. Chris was an ex-banker, or was a banker with one of the investment banks, and they brought him over to try and change that narrative. And he was doing that progressively, and Chris ended up being on the takeovers panel as well, and was a wonderful mentor early in my career. But I remember the first transaction we worked on, which we pitched against some of the investment banks, and it was at that time of that summer vacation work, and it was the Reckitt and Coleman had just merged with Benckiser. I'm really testing my memory here. And they wanted to offload a whole bunch of brands, which was a circa $50 to $100 million deal, which was a big deal for KPMG at that time. And we won that piece, and I worked in a deal team putting together the information memorandums and the data room and running that sales process. And it was the first of its kind in terms of, you know, starting to look towards a larger deal value, one in which we were engaging with private equity as a buyer audience, but being on the other side, and was a bit of a stepping stone for KPMG to actually change from just being a corporate advisory business servicing a tax client or something like that as a secondary. In this case, it was looking to be a primary advisor.
So KPMG in the initial part of your 20s, then Gresham Partners, and then back to KPMG. Talk us through that period. What prompted the decision to return to KPMG?
I might explain a bit around the decision to go to Gresham. And in fact, one of the associate directors I was working closely with at KPMG was going over there. And I wanted a bit more public market experience, and KPMG wasn't known to be doing those pieces of work at that time. And so it was with a heavy heart that I left KPMG. I really enjoyed my time there, and they gave me my first opportunity, and loyalty is a lot to me. And so it wasn't a case that I just simply said, listen, I'm out of here. It was me taking Chris on a journey and explaining a bit about what motivates me and why I thought I could be better for KPMG long term if I went to an investment bank. And at that time, I was deliberating across, there were a couple of firms. Some of the large US investment banks had also approached me. And so, you know, I was young and wanted to work, but I wanted to work on some of the best transactions. And Gresham, when I joined in 2001 in April, was a very different organisation to what it is today. David Feetham had set up the corporate advisory business it already existed through James Graham and Graham Rich and the founders, but he'd set it up where it was more standalone, and Wesfarmers had an investment in Gresham, and so they already had good exposure to Wesfarmers type deals, but David wanted to take it into another space. So he, at the time, the corporate advisory division was only 6 or 7 people in Sydney, and didn't have a Melbourne office, and had a Perth office which had 2 or 3 people. And I walked in April 2001 and as a junior analyst, and they hired 4 or 5 people at that time, and one of the first transactions I worked on was the back end of the BHP Billiton, which was an enormous transaction, and just helping out on some of the bits and pieces towards the end of that. And then went straight into a public markets transaction for Wesfarmers, which was the hostile takeover of Howard Smith as a junior analyst, and then rolled straight into the Delta Goldfields merger, which became Orion Gold, which was, all transactions were north of $1 billion. And one of them was the largest transaction in Australian corporate history at that time. And then each year it was at least 2 to 3 public transactions in which I worked on. And so it was across many different industries, from commodities into wine with the Peter Lehman takeover defence, into industrials. And it was a great experience. I didn't see too much of the sun. I didn't have many weekends to myself. But the thing that was most brilliant out of it were the people in which I got an intimate exposure to, the likes of Tony Berg, Graham Rich, James Graham, David Feedham, Chris Boehm, who then came in and ran the Melbourne office when Gresham opened that, and to get that exposure at a young age, and in each year being promoted, it was a quality experience. And again, with a heavy heart, I sort of decided to part ways with Gresham to go back to KPMG. And what motivated me there was, probably fair to say, a bit more balance in my work life. But more importantly, I thought I could bring a skill set to KPMG, which they didn't have, through public market transactions. And further to that, really make my mark in that business, and also within the KPMG partnership over time, and see that grow into a serious player in the corporate advisory space.
You mentioned being promoted year on year then. What did you put that down to? Obviously hard work played a part, but was there any secret sort of ingredients to that success that you saw?
I was never shy in asking questions, and probably to the point of being annoying at times. But I felt like if I asked the questions, and I'd always open it up by saying, we shouldn't be scared in honest answers and or honest suggestions, and I'm going to ask a bunch of questions, but I just want to save time and make sure that what I'm doing actually gets us to the right result. That was the first part in those early years, and that came out of me not asking enough questions. So that was a lesson learnt, and so I sort of put it down to that. Obviously, work ethic was another thing, and also being really respectful for people who had been in a career path and had experience. You can't replace experience, and so that's probably the key ingredients in those early years.
So you leave Gresham and rejoin KPMG, and by 2007, as I understand it, you were appointed a partner of the business, aged just 28, which is obviously phenomenal in anybody's language. How did you go about that? Was it the skill set and the experience that you brought over from Gresham Partners into KPMG that led to that partnership?
I think it was a combination of a couple of factors. The first is that there was a skill set which I had, which others in the firm at the time didn't have to the same length. They may have had parts. The second was KPMG were looking at that time to younger partners as an energy to grow that business. And then the third part of it was Gary Wingrove being appointed, who subsequently became CEO, but into a head of corporate finance role. And Gary knew quite a bit about me, moved from Melbourne to Sydney to take on that role. And he understood where I wanted to go in my career and how that worked within the KPMG partnership. And him alongside Rob Bazzani, who eventually became chair of our Melbourne office, at the time in which I replaced Rob as head of mergers and acquisitions. They really believed in me and took a chance at a young age. And I've got a high degree of respect for those guys. And, you know, I'm very thankful to them as well. They gave me enough rope to be able to grow, but also not too much as well. And so they really demonstrated some balance. I will say that I think, you know, I don't put things down to luck, right? I think you make your own through key ingredients in life, but it was pre-GFC, and I think if it was 2011, it probably would have been a different situation. It was a bit more challenging then to come into the partnership, but at that time, you know, all firms around were actually looking at ways in which they could grow, as opposed to ways in which they manage costs, and I was the beneficiary of that.
So you're 28 and you're a partner of KPMG. Where did you see your life going at that point? You were later to be appointed National Head and Managing Director of the KPMG Australia M&A practice. But where did you see, so you're 28, where did you see your career trajectory going from there? Was that always a goal that you wanted to run the M&A practice of KPMG, or was it something else?
I never really wanted those sorts of titles. I was more focused on my clients. Right? It was more about how do we become the best advisor to our clients, and how do we try to ensure that we're servicing them appropriately. A byproduct of which was, if you had success, you tend to get titles, right? And I often sort of laughed about it because some of these firms, they give the titles to the best performing partners, which then takes them out of being active in the market. And some of us are not the best drivers of the business either. But that's a separate discussion. But it was always very client driven, and you know, I wanted to look at where my point of difference was in that, and so initially I focused on some key clients where I thought I could make a difference and really service them, and in turn, then that became a key category of clients as well when I became head of the business.
And what did you specialise in within the business? I mean, you became as I said, the National Head of M&A for KPMG, but what are the deals that you worked on? What are some of the transactions that really stand out? I think there was the sale in 2013 of Nine Perth back to Nine Entertainment, as well as many others. Tell us about inside that period what you were working on.
So, you know, a lot of investment banks broke down into industry specialisation. We did that at KPMG, but specifically to me, I was very much around, as I mentioned just before, relationship with client, being that trusted advisor. And it's something I learned from Gresham. You know, Gresham would do large-scale transactions like BHP Billiton. It was the trusted advisor to the CEO and the chair, and then you would have a bunch of bulge bracket investment banks who would also be part of that, but the chair would tend to go to David Feetham, right? And the others would just plug into that format. So I wanted to be that to some key families, and I had earmarked those families through either people I knew or alternatively through the KPMG network. And the Gordon family was one of those. They were an old client of KPMG through the Wollongong practice, and so there was a family there which I knew was underserviced and just wanted to be their trusted advisor over the course of that transaction and many others as well. And so on that basis, it was very much around pinpointing those clients in which I wanted to really focus on and understand not only the transaction, but their business or their investments intimately. And so that's the way in which I approached it.
When you reflect on that period, say 2007 up until you left in about 2018 or 2019, how did you see the Australian corporate landscape change over that decade or so? What were the key themes at play?
I mean, obviously we had the financial crisis during that time period. It was a bit earlier in it, and that was very testing for any financial services firm like KPMG, and then specifically around M&A and with debt drying up and businesses finding it very difficult, there was a real challenge. What we decided to do was pivot the M&A business from traditional M&A into some government advisory work, and we were very early in the piece through our telco team. We deployed them onto the NBN advisory team, sitting within our infrastructure framework. My focus was trying to preserve as much of the team as possible, and at that time I was running the Sydney M&A group, and so I wanted to keep as many people in jobs, and proudly I'd say that we only made a couple of people redundant, and they were more around services that we just couldn't see ourselves going back into post the financial crisis, and we were able to preserve the roles within the M&A division of 95% of those in Sydney by deploying out into the KPMG network, putting people on secondment within our clients. But that certainly changed the landscape, and what it meant for us was by having that team, which was in Sydney, probably 40 people at that time, 30 to 40 people, it meant that when the market did rebound, which was part of my approach, we had a team ready to service, and we had continuity with our clients all the way through, right? And we were there all the way through with the same team, so they could see that we're there in the bad times and hopefully the good times as well. And it positioned us well. Our Sydney business, which traditionally was the poorer cousin to the Melbourne M&A division, that Sydney division quickly leapfrogged Melbourne and became the engine room of the M&A group nationally. And so that was exciting that we started to really build out our team even further and started to do better work on the back of a less competitive market post-financial crisis, because the investment banks were still trying to find their feet.
Clearly, establishing and maintaining relationships are a core component of success in corporate finance and M&A. What are the other ingredients, do you think, that are required for success in deal making?
You've got to be honest. It doesn't work if you're not honest. And I used to say to my guys, and we were the rare division in KPMG that worked on success fees and very small retainers along the way, but you'll earn more respect and longevity with your clients around the deals that you recommend them not to do than to do sometimes. And if, as a group, we don't have success because a couple of transactions fall away due to us being honest, that's something that I'd be happy with, right? Because it'll come back in multiples of that. And so, you know, it was a really important component to the fabric of the M&A business that I wanted to install while I was running it.
Before we move on, I wanted to ask you, when you look back at that time, what are your proudest achievements?
It's about the people, and I was only the other day talking to a KPMG person who came and had a cup of coffee with me, who's senior in one of the private equity firms. And I said, what makes me really proud is seeing the success of so many of the people who were in the M&A group from sort of 08, or even prior to that, but you know, when I started to take on the leadership role, and you know, some of the guys who came in as analysts or you know, at junior levels now occupy MD or executive director roles at JP Morgan, and many of the investment banks around Sydney and even overseas. And to see people like that flourish, where they spent 5 or 6 years at KPMG, whether it be in investment banking or in business or whatever it may be, that makes me really proud. I think it means that we created a really good environment for those people, which is what I try to think about whenever I'm in business, whether it's hospitality or whether it's in investment banking.
We've spoken about, obviously, the first chapter of your business career. Let's talk about your current business interests, in particular the launch of the Jaga Group, the business you founded in 2015 as a private investment group. Correct me if I'm wrong, but whilst this business has since diversified into other asset classes and sectors, its initial focus and mandate was on property. Tell me about the shift from sort of investment banking and corporate finance into property and hospitality, if you could.
It was actually in parallel. So I found it difficult to invest in equities while I was in a very senior role at KPMG, you know, with the firm typically having a touch point, whether it be audit, tax or advisory with a listed company. I thought it was more problematic to be investing in equities. So, and maybe it's the Greek blood in me, but real estate is something that I have a passion for, and I was buying some of the real estate assets that I own today back in 2008, 2010. And Jaga was really formed, they're my initials, in 15 as a holding company, but some of the real estate I've held for some time. And so I would buy assets whilst a partner at KPMG. I would find tenants, lease them out, have a manager, or in turn had my own financial controller, who's still with me today. And we would just collect rent, and I would continue in my day-to-day operations at KPMG and spend very little time on the property side once I'd set it with tenants and other things. My format was to buy commercial real estate which didn't have tenants, and with a view of tenanting up and holding it. And so it was vacant possession real estate I was attracted to in good areas and in hospitality typically. And so the way in which I approached it was from the tenant perspective rather than the real estate first. So I found Neil Perry wanted to move Rockpool from Circular Quay, and so I said to Neil, who was a personal friend, what about we find a new asset or a new property, and we relocated it. I bought a strata in that Burnsville Bridge Street, and Neil moved in there, fitted it out for him, and he operated Rockpool in from the Circular Quay one. And that was an example. I did that with Kylie Kwong and up at Potts Point and some of the Fratelli Freshers and other things, and sort of started there. Then it went into pub world, and I think I wanted to take advantage of the lockdowns that were put in place, and the pub industry, which some of the operators suffered, and so bought some pub assets and then broke up the space, hospitality on the ground level, commercial offices upstairs, and just rented those out, some of which form the basis of what we're doing now. It's an asset class in which I've always thought to be very interesting, and so, but property generally is a passion, and Jaga was something that I formed as a holding company for investment purposes in 15, even though some of those assets I've had for much longer.
And fast forward to today, correct me if I'm wrong, in excess of 15 venues, $500+ million in value, which is phenomenal growth over 7 years. Firstly, what do you look for when you're acquiring either a new commercial asset or a new hospitality type asset?
So we're talking about public hospitality there. So Jaga owns public, and Jaga has other commercial real estate outside of the hospitality assets. The 500 mils, the public hospitality, I think it's closer to 600 now, in fact. In relation to hospitality assets, what we tend to look for is an opportunity whereby we can reposition that asset. Someone in the industry said to me when I bought the Strand and Empire Hotel off very experienced operators, I think you're going to really struggle with those two assets. The people you're buying off are very good operators, and they are, but they just were doing it in a different format. And so the way in which we looked at those assets were they're well-positioned assets, they're doing very well on the ground level, but there's greater opportunity in everything above the ground. And so I'll take the Strand, for example. We decided to refit all the rooms upstairs and take them back to what they were many years ago, which was really nice accommodation. And then we decided to invest in a rooftop, and what we've done and achieved is a weekly turnover which is 2 times what, in a very short period of time, what the previous very good operator did, right? Same with the Empire as well. So it's what we look for is a way in which we can approach it in a different manner where we can drive the asset. We also look at assets where we can change the composition. So in other words, we might introduce many revenue streams, ground level hospitality, accommodation on levels 1 or whatever it may be, into a rooftop or something else. And we also look at opportunities whereby we can actually do planning and unlock further value. And often a lot of these assets are owned by publicans for many years, and they don't actually look at the controls, and there's a lot of scope. And the way we've approached public hospitality is that we're an end-to-end model. So we have our own design team, which includes 3 architects and 3 interior designers. Our own construction team, where we have a head of construction, 3 construction managers, 7 or 8 site managers, and then we engage directly with subcontractors, right, into our operations world, led by, I think, the best in the business in Peter Krennis. And we operate then, and we operate from a food and beverage perspective, from an accommodation perspective, from a gaming perspective, and we have general managers across all that, each in their lane, and then combined an ecosystem, which means that we're extracting the most out of the buildings in which we're operating.
So if you take it at face value, it's essentially a repositioning type strategy. I wanted to ask you, if you look at some of the recent transactions you've done, Noah's Backpackers in Bondi for 68 mil, the Strand Hotel, which you mentioned, for 17, Camellia Grove Hotel for 16 as well. If you look at the last couple of years, there's obviously no shortage of opportunities to reposition assets and be able to input those multiple revenue streams of development upside and whether it's pokies or whether it's accommodation or whatever it is. Are you finding that it's more difficult, more challenging, more competitive to find those opportunities in Sydney now?
Look, it is. I mean, through the first lockdown, I like swimming against the tide, and I spoke about how I wanted to keep the team preserved at KPMG through the financial crisis, which would give us a springboard into the market recovery and how we could service our existing clients and then grow. I took the same approach with the hospitality business. I was trying to option up or do long settlement deals in that first lockdown and shortly thereafter. I would say it's calculated risk, but there is risk, and so I made that decision to do that. And the deals in which we were finding at that time, there were much more of them and much better pricing in that pub world. But at that time, I didn't have an operating team. I was still buying real estate and looking to actually build that operating team when we came out of it. And so my main focus was the refurb process when lockdowns ended, or we started that refurb process to position into lifestyle products. And that's how we see the group, a lifestyle group. And so Peter and I have been long-standing friends, and he still had commitments at Crown, but wanted a new challenge. And so it wasn't until Pete sort of came on board formally around 12 months ago, but we've been talking in the lead up to that, that we had built out the framework of our operating team, which enables us now to look at things differently and assess things differently. So we can look at a potential hotel, or when I say a hotel, more a mainstream accommodation asset, or a pub, and we can actually look at our own internal data points, which are based on fact and history, and apply that principle to what we think we may be able to do to create a forecast, which gives us our own view around what we can pay and what it will be worth. And to give you an example, I acquired down in Oxford Street, I'm pointing in the direction where it is, the Arts Hotel in the Rose, Shamrock and Thistle in April last year. It was a competitive process. Many developers were looking at it. Oxford Street, Paddington, 1,500 square metres of land. Existing hotel, which was 2-3 star, pretty average accommodation near the hospital and Allianz, and a pub next door. Highly competitive process with developers. We knew that we had a comparative advantage because those developers would have been looking to do office or residential, take a couple of years to unlock the planning. And so, what price they'll pay, they'll have 2 years, 3 years of holding costs and build timetable. We wanted to approach it with a exempt development, refurb type scenario. Now that hotel we opened 2 months ago, not the pub yet, it's in the press today about the pub, which will be opening around Christmas. But the hotel we opened 2 months ago, and in the first month of trading, we're sitting at 60% occupancy. We're at 100% this weekend, 56 rooms, vibrant poolside hospitality offering and ground level. And so that enables us to have data around any other boutique hotel that's out there and what we think we can do now as well. Your rates, how you'd go about, because we don't go through OTAs, we don't go through Expedia and other things. We do it through, marketing and socials and search. It's a different approach, but one in which our experienced team has executed on before. So, we think there's pockets of value still out there. Pubs, a bit more challenging. That market has run hard, but in the hotel space, it's probably a bit behind So where we're at today, we're looking at assets where we can reposition, where it's where pubs were 12 months ago or 18 months ago. So the recovery's been a bit slower.
And from what I understand, there's also a geographic diversification. There's 2 hotels, one in Collingwood and one in St Kilda that you've got down in Melbourne. Where are you seeing the opportunities outside of Sydney? Are you seeing opportunities in regional areas or in other pockets of Australia, be it Queensland or elsewhere?
So we've got 3 in Melbourne. We've got one in Kew as well, which got a bit of attention around the time of the election because there was a bit of paint from a Teal candidate, and the federal treasurer at the time wasn't too happy about all that, and we found ourselves right in the middle of it. And one thing we don't do is play politics. We just want to sell beer and good food and great rooms and create a great experience for our customers. So, but we do have 3 in Melbourne. That asset specifically is going through planning at the moment, and we've got a really interesting model that we're going to be pursuing on that asset because we can do 10 stories on that site. But we do own a hotel in Ballina. It's on Shelley Beach, called the Beach House. We're going through council and some matters in relation to that, and we've got something in Crescent Head as well, which we're doing a refurb on at the moment. We like that regional side. We think there's a lot of opportunity in relation to that, and we want Public as a brand to be seen as a trusted brand from an experience perspective, that our customers go into a public venue and they know they're going to get a quality experience, right, at an affordable price. And so it's the execution of that we're very focused on. And one of the things that Pete and myself always talk around to our staff is, a bit like my KPMG experience, always think of your clients first. There's a lot of hospitality people that actually think more around what they want, right, as operators and owners. We want to be thinking about what our customers want as opposed to what we want in our venues. So we take very much an approach in relation to, customer first.
Where do you look for inspiration in terms of that brand building? Obviously in Sydney and recently with the expansion in Melbourne, Maryvale's done it very well. Lucas Restaurants have done it very well in both cities. Is there one of those sort of brands that you look to either globally that have become a real lifestyle brand that you're trying to emulate in some regard?
Justin and Chris well, and have the highest regard to both individuals for creating some groups of real significance and scale. At the time we were thinking about funding options, it was earmarked that we were thinking about an IPO and in the not too distant future. And there were some articles comparing us to a Maryvale and other things. I mean, from my perspective, I don't even dream if we create a fraction of the business of what Justin has. But if I was spoken to at that time, I would have said, look, we're positioning ourselves in a very different manner. We are very accommodation-led in our approach. So all our assets, bar only a few, 2 or 3, have accommodation as part of its offering. And so it's around that ecosystem of, checking in, having a vibrant hospitality, having a place to be able to have a meeting, and this engagement within our building is what we're trying to achieve, as opposed to the pure food and beverage type model. And that's how Public wants to position itself going forward. The way in which I would see ourselves, if I had to compare us to a particular brand, it's not just around our execution and operations model, it's around what happens to get us to that point. And so Citizen M is a good example of that overseas. They have the identification, the design, the build, the operation, right? it's all and sundry, and that's what that's what I'd like to see over time. I mean, that's what we're doing at the moment, and so very nice to be mentioned in the context of Maryvale or Lucas Hospitality Group, but we do want to see public being a very different offering.
Before we move on, how big could this brand be, or how large do you want it to be?
It's not so much about how large it could be, because it's more around, we will grow when we know we can create the pillars of what our offering is. So we'll continue to grow as long as we can satisfy that. And what I mean by that is the key pillars is we want to have an intimate, authentic relationship with our customers, right? Across many different ways in which we can have that relationship with them. And so while we continue to do that in the market, and we can continue to fund that, and there's opportunities out there to achieve that, we'll continue to grow. And so to add to that, obviously we need the right people to be able to create that environment for our customers. And so a key component to it is the people within our business and how we execute as well. So, right now it's quite a challenging environment, finding staff, and so we won't continue to grow if it means that we can't find the right people to be able to create that experience for our customers. And we won't continue to grow if we can't create the right working environment for our people in our business, because the reality is that all we're going to create is a working environment where you tire people out, and that's the last thing we want to do.
A couple of questions to finish outside of your typical business activities being Public Hospitality Group and Jaga Group. I wanted to ask you about some of the interest that you've held, in particular in technology, in film, in mining and in energy. What guides your philosophy in investing or sitting on the boards of some of the companies that you have previously done or that you sit on today? I think Laurus Energy being one and Skyfire Limited being another.
It tends to be around, and they're all held in Jaga. So Jaga is an investment vehicle, as I mentioned earlier, which invests across many different asset classes. And the philosophy is around the people who I'm backing. So all those examples that you just gave are ones in which it's been a particular management team or a particular person who's brought me that opportunity, who I believe in, and who has explained to me a particular opportunity and a way in which they can affect a strategy which is going to disrupt or create a really interesting value enhancer or opportunity. So because I'm not actively involved in those, yes, I might be a board member, but it's a non-exec type role. It comes down to who's executing, and so I will invest when I feel comfortable around the people who are executing it. And often it's led by the person who brings it to me, and I'll be backing them.
And what about films? I think I've got this right. You're an executive producer for a number of films, Last Cab to Darwin, Boys in the Trees, as well as others. What's your association with the film industry?
So again, Two Johns is the name of the film production business. So it's a film and television production business. Two Johns, John Malloy and Jon Adgemis. So John and I met actually through his brother Mick, who's a bit of a personality in Australia. And John presented Boys in the Tree to both Mick and I, and I really liked John, and he was working at Mushroom at the time. And I said to him, look, I'd like to do more in the space. I love the creative area, the arts. If I could act, if I could write well, then I'd probably do it. Although I'm sure my mother says at times I was a good actor when I was young, you know, I do love the creative and the art space, and Jon, I thought he is a real talent, and so we created two Jons, and I think the Gloaming was our first production under that banner, even though I'd done other things, and now Barron's, which has just been nominated for I think Australia's best drama or miniseries, I should say. But again, it was a decision where I'm backing an individual who has now grown the two Jons team, and we're actively involved in a number of different projects. And you know, there was a philosophy beyond that, which is streamers want content, and so those who can produce, I think, will be in pretty good shape.
My final question is, so you've been involved in property, as I mentioned, in technology, in filming. What's next? What's the next chapter look like? You're obviously going to build the public hospitality business as well as those other business interests, but are there any sectors or industries that you're not in currently that you're sort of looking to invest in, or that you think offer long-term growth fundamentals?
Look, I think that my focus will be more around social investing going forward. I've got a strong desire to spend a lot more time building accommodation in the NDIS space, because I've got a nephew with a disability, and I think the accommodation that's out there could be done better. And so that's an example of where my head's at in relation to investment. It's probably not driven around return as much. It's more around, you know, where can I use some of my skills and how they can be applied to create something which is more around social going forward. I think there's some wonderful opportunities out there for investment. Generally, I know we're living in some pretty interesting times, but there's pockets of value out there. But my main focus will probably be more on that social aspects going forward.
Jon Adgemis, absolute pleasure having you as part of the series. I know it's been a long time coming. You're a busy man, and appreciate you coming on the program once again. Thank you.
Really appreciate it. Thank you.